Good afternoon and welcome to the Market Wrap for Tuesday, the 2nd of June. And today was quite a choppy session for Aussie investors. So we started the day on quite a rough note. We're down by 1.1% at our worst levels, but we did manage to claw back almost all of those losses to end the day almost completely flat, down by just 5 points to 8,724 points. That's a very similar outcome to yesterday when we fell by around 4%. So quite a lot of caution in markets, essentially unchanged over the past couple of days, down by just a few points over Monday and Tuesday as investors try to digest the mixed and conflicting messages coming out of the US and Iran. And it's also ahead of quite a busy week with GDP numbers coming out tomorrow. We have Michelle Bullock speaking later on in the week on Thursday afternoon, and also US job numbers out at the tail end of the week. So perhaps investors just pausing ahead of those key things that are still yet to come this week. But look, across the different sectors, it was fairly mixed as well. We saw 5 of 11 sectors improving. There were strong gains from mining and tech stocks, but those were offset by declines from banks, retailers, and property stocks. But looking at the sectors in a little bit more detail, we did see tech stocks up 4.7%, extending yesterday's jump of 5.5%, which was the best session for the sector in over 6 weeks. So today, the tech sector surging to a 4-month high, of course, following another strong session from its US peers, with the tech-heavy Nasdaq notching another record high overnight. Miners also had a good day. That was partly helped by our largest stock, BHP, which climbed to a fresh record high. But on the other end, we did see the 4 major banks ending lower, which weighed in the financial space, while consumer staples, healthcare and real estate also fell by over 1%. So all in all, quite a mixed session today. In terms of the winners, the likes of Life360, Xero and WiseTech were very close to the top of the winners list once again. So they did help to boost the overall tech sector. SRG Global, which builds and maintains essential infrastructure, including roads, bridges, water networks and the likes, it actually topped the winners list today after securing several contracts with blue chip clients across a diverse range of sectors worth almost $1.9 billion. So today, its share price soaring to a record high. And Australia's largest gold miner, Northern Star, surged 13.5% after activist investor Elliott Investment Management disclosed a stake worth more than 1 billion Aussie dollars, and also called for a strategic review of the business that could potentially open the door to changes which may unlock shareholder value. So investors cheering that update today. On the other end of things, Vodafone owner TPG was the worst performer of the day after providing a mixed trading update for the first half of the year at its Investor Day. So its shares down 7.5%. And many of our retail and property stocks that own shopping centres were under some pressure after the Fair Work Commission approved a 4.75% increase in minimum award wage, which will boost incomes for millions of workers, but investors are concerned it could also increase labour costs for retailers and potentially weigh on profit margins as well. So you can see JB Hi-Fi down 5.5% and Stockland down by over 4% in today's session. Now, currencies are largely firmer. We have the Aussie dollar buying 71.8 US cents, up 0.3%, and also the Aussie is firmer against the euro and the Japanese yen. Now, looking ahead to tonight, US markets are expected to dip slightly at the open, but remember, this is after the 3 major indexes posted record highs over the course of yesterday's session. So all at record highs, but looking like they could edge lower at the start of trade. Still plenty of time between now and when the US market opens for that to potentially change. And then, of course, locally tomorrow, all eyes are going to be on those GDP figures, which are out at 11:30 a.m. Sydney time. Have a lovely night.